The Canadian jobs report came out weaker than expected, and it is leading to a weaker Canadian dollar. The dollar versus Canada has moved up toward the highs of the day. I'll go through the technicals that are driving this currency pair in this video, so let's get started. I'm going to start by taking a look at the 4-hour chart and looking at the price action this week. If we look at the closing level from last week, that's at this dashed line right here, and the opening levels for the current week, we initially saw a move to the upside that came right up to that 100-day moving average. That's a blue line in this chart. What did we do? We found willing sellers against that level. Why? Risk can be defined and limited against that moving average level. The price moved lower, and where do we go? We came down to the 100 bar moving average on the 4-hour chart. Yes, we did move a little bit below it, but then it couldn't sustain that momentum. We moved higher. Where did we go? We went to the high price right here from the high price from a few weeks ago and found willing sellers against that level ahead of the 100-day moving average. So buyers and sellers were battling it out, and that's what's happened this week going into today. Into today, we did come down to once again the test of the low right here against the 100-bar moving average. We did the same thing that we did at midweek, found willing buyers against that level, helped by the Canadian jobs report, which again came out weaker. That has pushed the price higher. So what do we know? Well, we know that we have resistance right here against this old high. We have the 100-day moving average up here. We have the 100-bar moving average in the 4-hour chart down here. So this area right here is our levels of importance. If we do break above the 100-day moving average, we're bullish. If we see momentum below the 100-bar moving average, admittedly we've moved below it. Yes, we have, but if we need to see that momentum to take the price down to the 200-bar moving average, if we get below that level, that would increase the bearish bias. Now, I want to take a closer look at the hourly chart, because the hourly chart is also telling a little story. And if we look at the hourly chart, look at this blue line right here. This blue line represents the 100-hour moving average. And what have we seen? Well, we saw sellers against it not once but twice in trading yesterday. And where are we now? We're right up testing that 100-hour moving average at 1.3759. So guess what? If we get above that level, that would give the buyers a little bit more of a oomph, a little bit more confidence, a switch in the bias from a little bit more bearish to a little bit more bullish. There's work to do because we have the 200-hour moving average right here. We have the 100-day moving average right here that we do still need to get above. But it's another step. It's a step in a change of the bias more to the upside. So be aware of all this. This is what's driving the dollar versus Canada for traders, for investors. I hope you find it useful in your trading. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.